this growth could be extended as we continue to deal with the push-pull of COVID.
We agree with the stock market. I think earnings growth, not valuations, will drive markets higher next year.
I think the market is telling you that we're closer to disinflation than inflation.
This is a Fed that's going to take its time. It's going to measure twice and cut once.
The Fed starts to taper in November, maybe December, but either way, they're tapering.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. What an interesting August it is. Thrilled to have you on radio, on television. We launched forward with Bloomberg Surveillance today. Jonathan Ferro out. I got a photo opportunity yesterday, Lisa, of Ferro. He's somewhere warm and beautiful and lovely and palm trees. Pulling his short straw this morning. Taylor Riggs joins us as well. Taylor, good morning. My deepest sympathies.
Thank you for having me. I hear we had record highs yesterday.
Well, that's where we are, record highs. Lisa, let's get right to it. It is a jump condition. If you look at the standard deviations up of this equity market, I'm sorry, Lisa, 2 days in a row, we break out.
And it's a jump condition in the projections of Wall Street analysts as they try to increase all over their projections as we were speaking about yesterday. The interesting thing to me is the yawning gap between some of the projections. There's a 27% differential between the bears and the bulls for S&P projections. The lowest is 3,800. The highest is 4,825. Just to give you a sense of how much uncertainty there is, Tom, on Wall Street.
Normally, Abramowicz wouldn't do that, but she does it for Taylor Riggs. She goes mathy on us in the equity markets. Taylor, how do you link the bond market and its oddities into where we are with a great bull market?
I keep hearing calls that yields have to go higher, and yet you get really strong 2-year auctions like yesterday, a really strong 10-year auction the week before, and it seems like there is no alternative, not only when you talk about the equity market, but the bond market as well. It is foreign buyers as well that we hear that are keeping these yields low. Yeah. So how do you get a rising bond equity market when yields feel pretty anchored despite the calls of yields to climb higher?
Bob Michael to join us later. I'm really looking forward to that. Lisa Abramowicz, I'm sorry, the conundrum here going 126 out to 129. We're about ready to get to a 130 10-year yield. Explain to our audience on radio and TV, what is the significance of going from 112 out now almost to 130?
How do we understand this bond market? Honestly, not to get existential, but that's what I do. Honestly, this is one of the biggest points of uncertainty. Yes, it matters because the direction is higher. Higher yields matters to everything from equity valuations to the borrowing costs of companies and individuals. However, we're still at very low rates. And the question, Tom, is, let's say there is tapering. What's the response in markets? Do yields go up? Or do they go down because we get a lower growth expectation going forward? Honestly, the disparities of opinions on Wall Street are just all over the map.
Lisa in the timeout chair, folks, that was a 4-syllable word in existential, and that
Which one?
We don't
Existential. We always do existential.
Existential.
We do existential Thursday and existential Friday, and now I'm bringing it to Wednesday.
Well, that's different. That's a branded product with sales and endorsements as well. Let's do the data check, which is branded. Futures up 3, Dow futures up 17. These are fractional moves, but nevertheless, 3 days in a row, the trend is your friend. The VIX 17.25 gives little information. We mentioned the yield, well, a 1.30 now, rounded up off 4 digits, 1.30 on the 10 years. A huge deal. Oil, $71. Brent crude, that's a surprise of August. And again, dollar a little bit weaker here. Euro, 117.48. On the wall, Lisa Abramowicz with wisdom for the morning. Lisa, what's is it Pelosi? Is this a Pelosi gun?
We could talk Pelosi, grilled to the wall as we talk about this. And we'll just note that with crude, it's the first down day after 2 days that were the biggest 2 days of gains since November. Okay, here's what I'm looking at. In the swamp of economic data, 8:30 a.m., we got durable goods orders. We're expecting to get the 14th increase out of 15 reads. The idea here of ongoing momentum and demand from companies. 12:10 p.m. on Bloomberg Television, Amtrak Chief Executive Officer William Flynn will be speaking. How much will he talk about Nancy Pelosi, the infrastructure bill, and the outline, the resolution that was passed yesterday, the $3.5 trillion plan? To be very clear, This is a resolution. It does not give us more details. It is not a bill. How close does this get to getting passed? And how closely is Bill Flynn in contact with people in Congress to get something passed that he thinks will benefit his infrastructure, his network? And today, I actually am really interested in this, Tom. President Biden is planning to roll out a number of cybersecurity steps. He's planning to meet with a number of top tech CEOs, including Tim Cook, Satya Nadella, and Andy Jassy. What are these outlines? How much does he view cybersecurity as the new front and to build on that versus some of the other terrorist threats, especially with the backdrop, Tom, of Afghanistan?
Are these guys going to be in Washington, or is this a Zoom meeting?
You know, that's a great question. I think that it's going to be Zoom, but I need to double check, and I will fact check that.
Okay, well, what are they going to do? They're going to feel good. Everybody's going to ask Jassy about the Amazon stock performance, right?
I'm sure that that's President Biden's first question, and we'll get an exclusive. No, we're not going to get an exclusive. Tom, carry it away.
Here we are on Wednesday. Claims tomorrow really getting my attention as well. We've got lots to talk about with very good, interesting guests today. Thank you, Julie Norman, particularly from UCL London, for being on yesterday on what's going on in Afghanistan. We'll go to Washington on that here in a bit. Right now, we start strong with Julia Coronado with macro policy. Her calls for BNP Paribas coming out of the financial crisis were absolutely extraordinary. She was way out front on the glide path of GDP to an underperformance in 08 and 09. Dr. Coronado, thank you so much for joining us. Let's do GDP before we do Powell. Do we underestimate the glide path to a lower level on this boom economy? Are we setting ourselves up for a shock of lower potential GDP and growth?
Well, Tom, I think that we still have reasons for optimism. I think the fiscal developments you were just discussing suggest that fiscal policy, even though a 10-year infrastructure package is fundamentally different in its impulse from a gigantic cash stimulus, it still is a tailwind for growth and one that will be supported for a long time. That's a direct contrast to the years after the Great Recession when fiscal policy went from supportive to restrictive very quickly and stayed restrictive for years. That was a headwind that the Fed had to battle in terms of supporting the economy and getting back to full employment. So I think that's a fundamental difference. We are gliding down. We're moving to a new phase of the recovery. But there still is reason for it. We see it in earnings. We see it in the labor market. The baton passing from the stimulus to a self-reinforcing growth in the labor market. There's reasons for optimism, even though the run rate on GDP is going to be quite a bit lower than it's been.
Julia, what's the direct economic ramification should the Fed start to taper their $120 billion of bond purchases a month in the very near future?
I think the ramifications are very moderate, and that's the intention, that they're going to start tapering probably in November. We're going to get signaling all along the way this week at the September meeting, and then the plans will be unveiled in November or December, depending on the toll that the Delta variant takes. But they're going to go slow. It's going to be a gradual process. They're going to step back, step by step, very methodically. And so we all see this coming, and therefore it shouldn't be as much of a shock to market.
Julia, but here's the thing. If it doesn't have that big of an impact, why continue to buy these bonds, even if there is this uncertainty out there about all these other factors? I mean, the Fed's balance sheet is still at $8.3 trillion. We're still looking at a lot of accommodation. It's not necessarily tighter policy, just less accommodation. What would you say to people who just say, look, if there aren't that big economic ramifications, why double down on a policy that perhaps isn't as necessary at this moment?
Well, Lisa, one of the reasons that it's not going to have a big impact is because they're going to go slow. If they ripped off the Band-Aid and just sort of stopped from one day to the next or very quickly backed away, then it would matter quite a bit. I think we would see a lot more volatility and uncertainty about the future. The fact that the Fed is going to peel back that accommodation very slowly is the reason it doesn't matter. They're going to err, the whole new reaction function, they're going to err on the side of more than less. We're going to make sure that the economy is on a self-sustaining course before accommodation, before they move to a neutral stance, let alone a slightly restrictive one. So I think the fact that they're going so slowly is the reason it doesn't matter, and the counterfactual of going a lot faster, just stopping, would mean that transition would be much bumpier.
Does an even taper between MBS and Treasuries make sense, or does a taper of MBS help cool a housing market that has been ever so strong?
Well, I tend to side with the sort of the consensus of the leadership at the FOMC, which is that, money is fungible. They're not targeting one asset class over another. It's about, the broader support that they're providing to financial conditions. So I don't think that it makes sense to try to target the housing market by focusing on an MBS taper. That's just not how it works in a portfolio balance world. So I think they're going to go even, and I think it'll mean gradual reduction in support for all markets, including mortgages and Treasury.
Yeah, Dr. Coronado, that's wonderful. A 14-year-old informed me last night money is fungible, so it's good to hear it from you as well. Julia Coronado with us in a really interesting conversation. Of course, this coming up on Jackson Hole as well. She's with Macro Policy Perspectives. Lisa, how fungible is the Abramowicz house right now?
Well, I will say that it's not coincidental that you're talking about Amazon share price, Amazon boxes, and the fungibility of money to a 14-year-old at this moment. I will say that is a notable progression in my household as well. I will say, talking about kids, the back-to-school trend. Yes. They are back to school. They're getting there, and we're getting more and more studies about the children and the potential ramifications from the Delta variant. They're looking past this. It's done.
We're going to have our pandemic coverage here, but really, I think part of it here, Taylor Riggs, is nationwide. We're going to see a lot of action. I noticed Ohio State stepping up last night.
And a lot of outrage, of course, in Florida as you think about the mask mandate, Tom. I know something that we'll be talking about later as we go down and do some of the politics, but it really does come back to these equity markets. Get the kids in school, get the parents to work, and maybe then things will all be okay.
Oh, everything will be wonderful then. Yes, it will be. Stay with us on a Wednesday. Interesting August week. Bob Michael coming up in a bit. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. The House has adopted that $3.5 trillion budget resolution backed by President Biden. For now, the agreement puts to rest a rift between progressive and moderate Democrats. House Speaker Nancy Pelosi was able to broker an agreement that would allow the House to approve a separate $550 billion bipartisan infrastructure bill by the end of next month. Senate Democrats are pushing a new plan that would penalize American companies that shift profits abroad. In a draft proposal released today, Senate Finance Committee Chairman Ron Wyden outlines his vision for how to reform the global tax system for multinational corporations. Democrats say that for decades, companies have been allowed to move profits and jobs outside the U.S. And President Biden is sticking to his plan to remove all U.S. troops from Afghanistan by August the 31st, but he's ordered his national security team to come up with contingency plans if he decides that a delay is necessary. The president says that completing the U.S. mission by the deadline depends on the Taliban continuing to cooperate and allowing access to the airport for those the U.S. is evacuating. A new study from the UK supports the case for booster shots for vulnerable people. It found that immunocompromised patients had weaker immune systems after 2 coronavirus vaccine shots than the general population. The US and other countries have begun rolling out third shots for people whose immune systems have been weakened. Securities and Exchange Commissioner Gary Gensler is warning hundreds of Chinese companies listed in the U.S. submit more scrutiny or get kicked out. He told Bloomberg, quote, "The clock is ticking." The SEC plans to enforce a 3-year deadline that requires Chinese firms to permit inspections of their financial audits. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Currently on a pace to finish by August the 31st. The sooner we can finish, the better. Each day of operations brings added risk to our troops. But the completion by August 31st depends upon the Taliban continuing to cooperate.
The President of the United States driving forward the conversation. I believe it was a 6-minute conversation yesterday as he manages the message. Maria Tadeo managing the message in Berlin, I believe in the last hour, with a wonderful conversation on Germany. Merkel now with a headline here on the Allies. Developments in Afghanistan are bitter for allies. There's a statement forward here into an exceptionally difficult Wednesday. We should be on Afghanistan. The images are horrible, but overnight there was legislation of sorts in Washington. Greg Villiers scheduled to join us here in a bit, which is wonderful. Anne-Marie Horton with the brief last night. Anne-Marie, the Speaker of the House is 81. We heard yesterday that she's completely focused on her legacy at the expense of the Democratic majority. Did she begin to lose the majority of the House last night?
Listen, she pulled a maneuver to get through and to acquiesce both sides of her party, the progressives and the moderates. And we should note, this isn't legislation. She was able to move forward a rule, which means it's go time for that reconciliation process, which already we saw today, the Senate Finance Committee putting out what their terms might look like in terms of higher taxes. But she was able to park the bipartisan infrastructure in a nod to the moderates for September 27th. In the end, she was able to make it work for everyone in her party, and that's her job.
I look, Anne-Marie, at the next step here, not only for the Speaker, but for the moderates. We'll talk to Greg Villiers about this, but frame out where the moderates are now. I mean, the Senate, there's no and if or buts, there's moderates. Did the moderates in the House capitulate last night?
I wouldn't say capitulate. They, at the end of the day, I think also came under immense amount of pressure from the White House. White House aides were putting under a lot of pressure for Democratic lawmakers to get on board with a plan. But they have firm now, September 27th, Speaker Pelosi put out a statement, I am committed to passing bipartisan infrastructure by that date. What I think this really does, Tom, is it's a little bit of a gamble for Pelosi in the sense that if she's willing to pass bipartisan infrastructure by September 27th, remember, the progressives say they will tank that unless they get the $3.5 trillion reconciliation package. It basically leaves Congress a month to get reconciliation done in the Senate. And this is where things are going to get tricky, because right now the go on the budget resolution is that you can have all these committees starting to put in the details, taxing and spending legislation, but you don't even know if it's going to be $3.5 trillion. September, when they really start going into the details, is going to be a massive showdown.
Although we are getting some details about the Senate tax plan that actually are indicative of the control, the power that the centrists have. And when we got basically a sense that the tax plan boosts penalties in companies sending profits abroad. This came out this morning. It is co-authored, though, this was what I thought interesting, by senators including Mark Warner of Virginia, a classic moderate. What can we glean from the fact that they seem to be driving the boat here when it comes to crafting the details?
Well, I would say that this at the moment is very high level, because in this draft legislation, which they're seeking, they want the public as well, and they want input by early September, there's no actual tax rates included. And we know the Biden administration was looking at something as high as 28% for Senator of West Virginia, Joe Manchin. That is just way too high. But I think until we see what the actual rates will be, we'll know exactly how aggressive they are going to be on the tax hikes for corporations. But it does show that they are going to go after companies in terms of making this money abroad and making sure they're not usurping the IRS.
Yeah. Was this $3.5 trillion resolution, not necessarily a bill, was passing the resolution enough to move forward the $550 billion fiscal infrastructure plan that has bipartisan support?
It was, in the sense that they got the go on the resolution, so they can that's really the nod to the progressives and just the whole Democratic Party to go finish the rest of the president's economic agenda. And they have a firm date. The Speaker has promised to bring up bipartisan infrastructure by September 27th. Now, if we go past that date, this would definitely be, you'd hear a lot of there would be a lot of arguments within the moderates about why did they decide in the end to go along with this plan. But they have a firm date to pass that, and it's before October. And I think at the moment that was fine for the moderates.
Anne-Marie, I asked you this question last night. I'm going to ask you again until I get an answer. Is anyone thinking about how to pay for this? Does anyone care?
Tax hikes. The bipartisan infrastructure, they say, pay-fors. It's already moving money around basically in the government. They have the I's dotted and T's crossed for that. But for the $3.5 trillion, they are going to be raising taxes. And it's just not just corporations, but it's going to be on wealthy. Again, we have a little bit of what that could mean this morning with this draft legislation from the Senate Finance Committee. But Taylor, your question is just the perennial question of exactly how much taxes are they going to get? Will it reach the $3.5 trillion? And will the moderates sign off on it?
Pushes forward. Biden holding a cybersecurity summit with tech giants, of course, today. Dan Ives over Wedbush all over this, saying that federal spending on cybersecurity is going to be a huge tailwind for some of these companies. What do you want to hear from this?
Well, it's not just tech companies as well. Jamie Dimon, Brian Moynihan will be there. You have a lot of energy companies as well. It's on the heels of huge cyber issues with the United States. In May, there was Colonial Pipeline. Last year, there was the Russian hack of SolarWinds. And what this group is really going to try to look for is the technology that the U.S. needs and the infrastructure when it comes to cyber, but also some 500,000 vacancies when it comes to the cybersecurity industry. And how do you train these people and make sure the workforce is moving in that direction?
Yeah.
So I want to see what deliverables this group comes out with.
Can you just fact check me, Anne-Marie? Is this in person or is this virtual?
Many are going to be in person.
Okay.
So I'll be there trying to, see who's willing to give us a comment.
So there you go, Tom.
I'm in awe of this. I mean, I guess it's going to be a nice distraction from the real issues at hand right now in Afghanistan and also the legislation. Anne-Marie, thank you so much. Go ahead.
The president's going to have a briefing this morning on Afghanistan, but I do agree with you. I do agree with you, Tom. I think for the administration, anything to kind of take the public eye off Afghanistan is welcome.
Is the effort, at least, if not, who says it'll be a successful goal, but they're working on it. Anne-Marie, what an insane August in Washington. Thank you so much. Greatly appreciate it. I'm sorry, Lisa, I know it's a new idea, cybersecurity, and they'll probably do ESG next week. With Afghanistan going on and with the legislation and with the two, as you've been great on, Lisa, the two-part America, I'm sorry, it's just not in focus for so many people.
I would agree that it's not in focus for a lot of people. However, especially with the Afghanistan issue, what does terrorism mean in 2021? How much are they going to talk about cyber terrorism from this other perspective? I mean, honestly, this is something that's important as a lot of people gear up for potential threats on an international front.
A lift to the markets, it's nevertheless there, just fractional, but we'll take it. Futures up 2, Dow futures up 20 as well. We've got much more for you on these most interesting breakouts of higher equity prices. Linda Dussel, Federated Hermes, coming up. This is Bloomberg. Good morning, everyone. Lisa Abramowicz and Tom Keene. John Ferro off on sabbatical. Look for a drawdown meditation. It'll be coming out next year. He's working on the final manuscript right now. Taylor Riggs in for John today. We're thrilled that she could join in her short day. Futures up 2, Dow futures up 15, the VIX 17.29. This is a really important conversation right now. Linda Dussel's with Federated Hermes out of the Pittsburgh Combine, Carnegie Mellon and Penn, which is in another part of Pennsylvania. It's not, I think Penn is not out in Pittsburgh, but with a lot of experience and really importantly across a cross-section of academics. She writes a memo this week for Taylor Riggs. It's a Christian Louboutin market. Discuss. Come on, Linda. Get the shoes in here. Why is it not a Valentino market and it's a Christian Louboutin market?
I have plenty of shoes in my closet. Don't worry about it. Just Christian Louboutin, they love their 4-inch heels.
Well, they love their 4-inch shoes, but that's the excitement here. Bring that over to the world of Steve Auth. I can't see Steve Auth buying Steve Louboutin shoes. Help me out. What do you mean by that, about the extravagance of luxury French shoes?
No. I'm just suggesting in my piece that I wrote last week that that you like good quality growth stocks these days. To me, that's the Christian Louboutin shoe. When I'm here doing a virtual call with you, well, I have my slippers on right now.
Right.
And those are my value shoes. So we've been in the camp that says, you should buy good quality growth and good quality value, kind of a a neutral regime here for the last number of months.
Right.
We now may be at a new point, back to value.
The gloom crew says that is going to end. What do they get wrong? Federated Hermes has been sustained in being in this bull market. What does the negative people get wrong about high quality?
Well, the high quality stocks are the ones that you would go to when you thought that the market was pretty well advanced. It's kind of what's been going on lately, very much so lately actually, where the stock market's making brand new record highs, but the breadth in the market has been getting thinner and thinner. So people have been using last year and then again this year those big mega cap tech stocks kind of as a defensive play, and those would be your Christian Louboutin type shoes, if you would, in the analogy there. But we at Federated Hermes have been bullish really ever since the Fed about a year and a half ago said, in the name of this pandemic, we will buy high yield corporate bonds if we have to have your back. We will buy bonds. For the first time ever, they said that to have your back. It was at that moment that I, as someone who was shell-shocked as everybody else was out there, said, it is dangerous to be a bear. And I've said that ever since that time. And here we are making brand new record highs in a month where we were supposed to have a terrible pullback, some sort of a pullback, 5% at least.
Well, and enter the danger zone, Linda, as we talk about the potential danger of being bearish at a time of such dynamism in the markets. There is also this question that David Stubbs outlined here on Bloomberg Surveillance a couple weeks ago of JP Morgan, where he was talking about a positivity shock stemming from the big tech world. The idea here that there is an increase in productivity stemming from some of the innovation, and that this is an underpriced feature in the economy and in markets. Can you talk a little bit about how that translates into your market call?
Yeah, that's really a very interesting comment. Of course, technology, as we all know, has advanced much more quickly in through the pandemic. And for years now, technological advances have made their way through really all the sectors of the stock market, all sectors. I think energy sector being the one that has been using most the advancements that have been made by technology. So this allows companies to have record profit margins. And whatever people worry about, and there's so much to worry about these days, for the stock market, it's all about corporate earnings. We have had record profit margins. We were at record profit margins at the end of 19 before we went into the pandemic right back. Now, record profit margins. That has everything to do with the productivity that comes from technological advancements across the entire economy, really. And so that helps to power earnings. So for 5 consecutive quarters now, corporate profits have exceeded analysts' expectations. They can't get bullish enough. So we think that the powerful growth that continues on with these advancements, as we're talking about here, will continue into next year. And it is still too early to get bearish, to get positioned bearish on the market.
Linda, when you get into a meeting with all of the portfolio managers at Federated Hermes at a time of such uncertainty, of such a huge yawning gap between the bulls and the bears in terms of S&P projections for this year, what's your guidepost at a time when, yes, I hear what you're saying with respect to potentially a sea change in productivity, but we're also dealing with the roll-off of some of the stimulus checks in September. Will kids go back to school? Is there the Delta variant? I mean, the levels of uncertainty are tremendous. What do you guys discuss? How do you look at this?
Well, these are what we would call the wild cards as to how these things play out. But, you have to stand back kind of and look at the forest for the trees. Now, we've been living with the pandemic for, well over a year, and we have our shots. And we have this Delta variant that came through, and it hit the South very hard. That was the least vaccinated group. And now it's peaking. We've seen enough waves of this where we see it peaking in the South. And those who will worry about us going indoors in the North, well, I saw a statistic very, very recently that said, I think high 70% of people over 50 years old, those are the ones most at risk, have had both shots. 80% have had at least one shot. The booster is coming right along just at the time you speak of the checks that rolling off. Roll off checks because what we have seen is that those states that refused the extra checks saw their unemployment rates go down. Get people back to work. All those help wanted signs out there are looking for help. So what do you have? You have record corporate profits, record forward earnings estimates, so that the price to earnings multiple is 21 times, reasonably high, but not versus inflation, not versus interest rates, not versus a year ago. So step back and look at the forest for the trees. The setup is excellent.
Linda, there are also no bears in the bond market either. Not when you talk about in your research note a strong 10s auction last week, a strong 2s yesterday. We pushed forward to 5s today. Why aren't there more bears in the bond market?
Well, if you had a bond mandate anywhere around the world, I think the last number I saw was maybe $18 trillion worth of global sovereign debt priced to a yield. So as low as our yields are, and I heard your early discussion this morning about how the 10-year bond yield has risen, I guess, from 1.12. I mean, they're ridiculously low numbers. You take what you can get. At least you're getting a positive figure. These are historically low numbers, and still people, I mean, who has all the money out there? It's people 50 plus. The aging baby boomers and older control 80% of the money out there. They're nervous Nellies. So we just came off of 3 weeks straight where retail investors have sold stocks because they're afraid and they just know there's a pullback. And all along, ever since the end of the global financial crisis, money's gone into bonds and not stocks. You don't have euphoria. These are remarkable times, and I believe one day we'll look back at this and say, missed if we did. Just a fantastic opportunity to buy stocks.
Are we anywhere near a level on interest rates where that discount rate starts to pressure equities?
Well, if you're a student of history, historically you were looking for inflation and the 10-year bond yield around 4%. We, of course, are nowhere near that, and we have a reasonably flat yield curve. Historically, I think it's maybe just under 2% between the 10 and the 2-year bond yields. When the Fed would start raising rates, I think you're about 1% right now spread. You're nowhere near them raising rates.
Yeah.
Yields all across the curve are just extremely low.
Linda, you have an exceptional palette of academics. So let me ask you the key question, and this goes to folks, the heritage of Federated going back years. Are we over-diversified? On a mathematical basis, let's go all Carnegie Mellon Tepper here in honor of Alan Meltzer. Are we over-diversified today? Do we own too many things?
Are you referring to in the financial
401k portfolio? You know, 60-40 split, and I got to own this. I got to have this, target that. Are we over-diversifying away our potential gain?
Yeah, I just want to clear up the fact that I squeaked my way through Carnegie Mellon University. I was lucky to get out of there alive. But no, I don't think that we're over diversified. In fact, I think that it's more of a generational thing. I think the older generation, the older we get, we think that we're supposed to be more and more conservatively positioned. That 60-40 idea is something we grew up with over many decades, and it just doesn't work anymore. That there is no alternative. That TINA idea has been around, as you know, for quite some time, because bonds aren't doing their job. So I might argue we're moving in kind of in the other direction, where stocks are the only thing, and mega cap stocks in particular. That's your defense. That's really kind of constant.
This has been wonderful, Linda. Thank you so much. Linda Dussel with us with Federated Intermets. Greatly appreciated today. Lisa, just by chance, I went over to Christian Louboutin and looked at the new arrivals in the macadamia flat boots. They say Taylor Riggs.
My favorite part of this is that Taylor, he doesn't even try to peg me with those kinds of shoes, just because he knows
you already
that
own a pair.
Yeah,
I'm a little bit more classy than the shoes you picked out for me, Tom, but I like where your head's at.
But seriously, this speaks to the supply issues right now, that for the haves in America, the people prospering, the supply shortage is real. You go into these stores, there's nothing there, Lisa.
Yeah, well, it's not just, though, the highest class of items. It's not just the most luxury of goods. It's across the board, and this is going to be an ongoing feature. Although I will say, ports back open over in China, the Ningbo.
Yes, there's a point of optimism. Futures up 3. Stay with us. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. The Biden administration has told refugee aid groups to get ready to help resettle as many as 50,000 Afghans. The refugees are being admitted under a program known as humanitarian parole. The program would target Afghans considered to be at risk under a Taliban-led government. The stage is set for the House to take a final vote on the $550 billion bipartisan infrastructure bill. A White House pressure campaign and assurances from House Speaker Nancy Pelosi helped unite squabbling Democrats. They adopted President Biden's $3.5 trillion budget resolution, and that cleared the way for the vote on the infrastructure at the end of next month. In Vietnam, Vice President Kamala Harris stepped her criticism of China. Harris urged countries in Southeast Asia to apply more pressure to Beijing. She also said the U.S. wants to upgrade its relationship with Vietnam to a strategic partnership. The U.S. may give Vietnam another former Coast Guard ship and is donating more coronavirus vaccines. A divided Supreme Court has rejected President Biden on a controversial immigration issue. Justices cleared the way for the resumption of a Trump-era policy of requiring asylum seekers to wait in Mexico while their cases are being processed. The Biden administration had revoked the so-called Remain in Mexico policy in June. In Japan, Prime Minister Yoshihide Suga will expand a state of emergency to cover about 70% of the population. The Delta variant surge has led to a record number of cases and is putting strains on the medical system. Suga faces a leadership vote in his Liberal Democratic Party probably next month. Public support for him has fallen to record lows. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
New York is launching a back-to-school COVID-19 testing program to make testing for students and staff widely available and convenient. I'm also immediately directing the Department of Health to institute universal masking for anyone entering our schools.
Someone we know exceptionally well. Kathy Hochul is the governor of the state of New York. She's from Buffalo. For those of you nationally, and internationally, she is the one we spoke to in the heat of the New York City pandemic, and she had some tangible courage out there when it was really dangerous. We are thrilled that she is governor, and we are, of course, efforting her for a conversation. She's been a little distracted the last couple of days.
That's the understatement of the year.
Yeah.
But honestly, carrying the baton forward in New York State.
I'd have her throw out the first ball at the Buffalo Bills home game, but probably it's a coin toss or something.
That would be your first question to her if she got in the show.
Here are headlines that the governor is interested in, and all are interested in. Johnson & Johnson, not Moderna, not Pfizer, saying the booster vaccine doses raises the COVID-fighting antibodies. That's part of the ongoing debate. And Lisa, that is a wonderful entree to this good guest.
Yeah, especially given the international focus of public health. The idea here of the booster, how we get that out when it's so difficult to just get the vaccine in arms to begin with. Dr. Bhakti Hansadi, with incredible experience internationally, transatlantic upbringing, bringing us the sense from Johns Hopkins. She is Associate Professor of Emergency Medicine. Dr. Hansadi, as we focus on boosters and the efficacy and the importance of bolstering the response in our bodies to the Delta variant and other variants that may come up, how problematic is it that we still do not have an infrastructure to quickly and easily get vaccines in people's arms internationally?
So it is problematic because in many countries, less than 10% of individuals have received their first dose of vaccines. Then the challenge with boosters is knowing who you've already vaccinated, where are the gaps, and how do you administer a second dose of vaccinations. And it requires a lot of micro-planning, a lot of money, and then a lot of other considerations of how do we monitor adverse events and how do we scale up implementation of vaccine sites. What's worrying to many of us is going to be that by the time we need the booster, the infrastructure is not going to be there because we're still going to be vaccinating people in the first round.
Dr. Hansadi, there is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurging cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What's making me really nervous today is that there is this like accompanying surge in deaths as well. So over the last week since I was last here, what I've been seeing on social media and the physician groups is people calling from Florida to Baltimore saying, do you have a bed? I have a patient that needs transferring. So we're now seeing that there has been an outstripping of resources while cases continue to soar, and you hit this like vulnerable tipping point where the need is greater than the resources you have, and that's where things go awry.
How do you respond when you see Ohio State will demand vaccination? To a grizzled medical pro, and Bhakti, this is your wheelhouse, how do you respond when you see an institution, Chevron Oil, or Ohio State University say, we've had enough?
You know, I think historically back to influenza and other viruses, right? So to go into schools, we demand that our children are vaccinated.
Okay, well, wait. How did we get here? You nailed it. Okay, Dr. Ansari, you absolutely nailed it. I lived this with polio, with parents crying over Sabin and that miracle fine. We had diphtheria from a zillion years ago. How did we get here now? Why isn't this like influenza and the others?
I think there was just concerns about what it meant to be EUA approved. That is new language to many individuals. Now that we have full FDA approval, there is increased confidence, and we can institute the same policies that we did with influenza. So if I want to work at Johns Hopkins Hospital, I have to have proof of vaccination for influenza and now for COVID, and that completely makes sense.
Does the full FDA approval, though, change anything on the margin against those who may have been hesitant?
Completely. So there is an estimation that about 90 million people were hesitant because they really didn't understand what the language of EUA approval meant. Now, with full FDA approval, we can rest assured and reassure those individuals that this is the same as any other vaccine. This isn't something new. This isn't something risky. This has the same data and the same level of approval of all the other treatments that they would take normally.
What work is being done to get children vaccinated? Tom, of course, brings up polio and likens this back a couple decades or so. What are the efforts on that front?
So I think the clinical trials have been completed for the 5 to 12-year group. The data is being combed through. We're expecting EUA approval any minute now. Pediatricians' offices already have the infrastructure due to the flu vaccination that they do to be able to vaccinate children quickly and effectively. I think it's going to be very simple to layer on vaccinations for children. And we've already seen in children ages 12 to 16 that capacity was there. And those children were rapidly vaccinated who wanted the vaccine.
Dr. Ansari, just to sort of put a bow on the whole conversation in terms of the urgency around vaccinations, you talked about the increase in death rate, and I'm wondering, is the research showing a higher virulence of the Delta variant, that basically people are getting sicker and the consequences are higher, even though there is a greater immunity in the general population?
Yeah, this data is very tricky. The best data comes from a Scottish study where they were able to compare the Alpha virus against the Delta virus across a whole health system. And they found that individuals did need increased hospitalizations, and younger individuals were more likely to get, including children. However, they did not show an increase in death. So I think Delta is likely to give you more complications. You're more likely to need the ICU, more likely to need oxygen. But whether you're more likely to die is unclear.
Back to Ansari, thank you so much. Dr. Ansari with Johns Hopkins University in emergency medicine, but much more on this global pandemic as well. Let's do a data check here. Futures up 2, down futures up 15. The VIX quiescent over the last 48 hours, 17.31 as well. The yield, there it is, Lisa, 1.3019. I'm sorry, that speaks volumes.
It talks about how even though we do have optimism, basically we've seen peak Delta fears, the optimism has only gotten Treasury yields up to 1.3%. I mean, Tom, again, how do we get back up to 2% as a lot of strategists are expecting?
Well, there we're on the real yield as well. Taylor Riggs negative 1.02% and the 10-year real yield. I'm sorry, it is not a lesser negative number.
No, I mean, you could argue it's come up from a negative 120 of just 2 to 3 weeks ago, but more than negative 1% certainly, of course, speaks to, well, perhaps maybe the pessimism in this market. To Lisa's point of what does the 130 tell us? Ask Japan. Ira Jersey nailed this the other day. There are negative real yields everywhere. A 130 on the U.S. looks good.
Well, it's an experiment to say the least. And again, what I would go to, folks, as well as the equity market speaking on the lowers. Greg Peters of PGIM said yesterday, lower for longer is where we are. We didn't think we'd be there in August. Maybe we thought we'd be there in February. But it's August. It's back to school. We need more Tang. Order some Tang, please.
Yes, please.
Futures up to. This is Bloomberg. Good morning. On radio, on television.
This growth could be extended as we continue to deal with the push-pull of COVID.
We agree with the stock market. I think earnings growth, not valuations, will drive markets higher next year.
I think the market is telling you that we're closer to disinflation than inflation.
This is a Fed that's going to take its time. It's going to measure twice and cut once.
The Fed starts to taper in November, maybe December, but either way, they're tapering.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. We welcome all of you on radio, on television. It's another hour of Bloomberg Surveillance. Thanks for the responses out on Twitter, by email, by carrier pigeon. We greatly appreciate it. Ferro off. Taylor Riggs in to save the day this morning. Taylor, I look at where we are, and I go back to all the academics you've done. None of it links together. I mean, Taylor, to be blunt, our act is not in the textbooks, is it?
It is not in the textbook, certainly not in level 3. It is a fully invested bears in this market. That is the phrase, Tom, I keep hearing. There are no bears in the equity market, and there are no bears in the bond market, despite yields calling to climb higher. At 130, what does that tell you?
The surrealness of this, Lisa, look at the headline now. Mexico GDP for Q2, it's a bit dated, up 19%, rounded up to up 20%. I mean, Lisa, the heart of the matter, and you've been really good on this, we're going from a boom economy to what we don't know.
Right. The idea of how quickly we slow, how much of this is base effects, how much is this going to roll into a new normal that looks different from the old normal, which was rather slow growth, and frankly, over the decades, slower growth and lower inflation. How much are we entering the same paradigm with even more debt and even an older population versus a productivity boom from big tech?
We've got a guest so grizzled, so ancient coming up here. We're going to speed this up this morning in this hour. Let me do the data right now. Lisa, futures up 1, Dow futures up 17, the VIX quiescent 17.32. We've had a jump condition on the Standard & Poor's 500. If you look at the standard deviations of August, we are now outside 2 standard deviations on the daily move on SPX. It's been deceptive, but nevertheless, it's a bull market. A bit of red there with the NASDAQ 100 right now. 210 spread, it steepens dramatically out to 102. See, Taylor, that's that morning sarcasm.
Yeah,
you don't need that in the afternoon, Taylor. You have to do that in the morning to keep people going with their tea, their decaf chai. What is it? Chai, kai? How do you pronounce it, Taylor?
Chai, decaf.
Yeah, I'm not from San Francisco. I have
just
no
to
clue
help
how
me
to
survive
pronounce
the
it.
5 p.m.
106 basis points on the 210 spread. Lisa Abramowicz chugging down Starbucks, the darkest black coffee they have. What do you have, Lisa, this morning?
Not doing chai today. I will just note that crude is actually turned up, which is interesting because it had its first down day after 2 big days of gains, and now we look like we're potentially building on that to talk about the optimism that you're seeing built into this market after, I think, 50 record highs for the indexes, the broad equity indexes this year. The data that I'm looking at, 8:30 a.m. durable goods orders. How much are companies in the United States rebuilding inventories, restocking? How dynamic is that market at a time when there are still these supply chain disruptions? Then at 12:10 p.m., I'm very interested to hear what Amtrak Chief Executive Officer William Flynn has to say. He's joining Bloomberg Television. I expect him to talk about infrastructure, how much spending from the federal government could fuel his company. And then today, President Biden is rolling out cybersecurity steps and meeting top technology executives Tim Cook, Satya Nadella, Andy Jassy of Apple, Microsoft, and Amazon, respectively. Tom, you said earlier, basically, this is a distraction from the main issues of Afghanistan, and can they get their legislative agenda through? However, there is this feeling that there is more of a cyber threat than ever before, and how much spending saying, will the federal government put behind this that will end up propping up tech valuations and, frankly, give people more confidence that at least that's not some sort of exogenous shock out there?
Very good. This is a joy, folks. Taylor Riggs, Lisa Abramowicz, and Tom Keene with you on radio and television. And what we're supposed to do is dutifully come out right now and talk about price up, yield down, or price down, yield up, talk full faith and credit, IG, high yield bonds, with Bob Michael. He's been at JP Morgan for 400 years and joins us this morning. Thrilled that he could join us. Bob, we're going to spend some serious time here on the great unspoken, and you nail it in your research note. Stephanie Kelton at Stony Brook has changed the world. She came out with modern monetary theory. We are in an MMT experiment of some type as well, and the financial media is not talking about this enough because everybody sort of wishes the theory would go away, which is unfair to something that's had such an impact. Are you a believer in MMT?
Good morning, Tom. It's hard not to be a believer. It seems like the go-to policy response now in a crisis where the role of governments is to borrow large amount of debts and deploy it through fiscal stimulus and try to shortcut to recovery. And the role of central banks is to print lots of money and buy that debt and ensure that the cost of the recovery is affordable. I think it's worked. It's hard to see where any pain has been created or where there will be problems down the road. I think we all sense that there's got to be something. What I'd like to see out of Jackson Hole is for the central bankers to say, this is an emergency policy response. This isn't a normal part of our toolkit. They need to draw the line somewhere here.
And I'm not sure, Lisa, and I think this is really important with no criticism of people like Claudia Sahm and Stephanie Kelton. I'm not even criticizing their cats, and they have cats at home. It's very evident on Twitter that they do. Lisa, nobody has an exit strategy from our pandemic MMT.
Well, no one has a sense of exactly what the consequences will be either. Bob, we talk about the potential of some deleterious, to use the same word from the day before, ramifications from the MMT types of policies that you talk about, yet we're not seeing them. Yields are not going up. Inflation, to the extent that it is going up, is recognized as passing and somewhat decelerating. So when are we going to see the negative ramifications from MMT-like policies?
Well, we're at an interesting point right now with Chair Powell and the Fed in the crosshairs of what's going on in Washington. And he's got Jackson Hole in the September FOMC meeting to start backing out of this. But right now, we're well past the crisis, and the recovery is underway, and we're recovering a lot of lost jobs, and we're going to close the output gap by the end of this year. And if MMT continues with $500 billion in an infrastructure bill and $3.5 trillion in various forms of stimulus, and the Fed continues to print money and buy debt, I think there's a moral hazard there where you're looking at the Fed underwriting a lot of government policies. So I think it's a very good time for the Fed to assert its independence, draw a line in the sand, and say that they're bringing these things to an end now.
When, though, and what commentary do you need to hear to get them to do that? Is that inflation goes from transitory to worrying?
I think that's part of it. I think right now they can point to substantial further progress hasn't been made on a lot of the things that they look at. When they look at where policy rates are, they don't need to be at zero for a lot longer. They don't need the $120 billion in large-scale asset purchases every month. They can move to something that's more normal. I step back and I look at where things are. And if this had been a normal cycle, say going back, I don't know, 20 to 40 years ago, maybe even 15 or so years ago, at this point in the cycle, I'd expect the Fed funds rate to be 2%, around a zero real yield. And I'd expect the 10-year Treasury to be around 3%, about a 1% real yield. So the fact that we're not there tells you the amount of distortion that the central banks are creating.
Bob, if the Fed were to say at the Jackson Hole meeting that they're planning to start tapering their bond purchases September, November, December, at some point in the near future, and indicated that it would be faster than expected, what would be the market response?
Well, I think the market's response would be a gradual rise in rates. And I know there's some debate out there about whether Fed tapering leads to a rise in rates or not. I don't get that at all. Let me tell you, if bond prices aren't the very definition of asset price inflation, you've got a central bank printing unlimited amounts of its own money and going in and buying a specific asset class. If that's not how you inflate the price of an asset class, how do you? You look at the negative 1% real yield on 10-year treasuries. I think the first stop is to get to something that looks around a 0%, and we'll get there.
How do you manage that, Bob? Bob, we're going to run out of time, but how do you affect a 100 basis point move in the real yield? Do you do it off the nominal, or do you do it with the help of inflation expectations?
I think you do it with the combination of both, but mostly with nominal yields, mostly with the realization that you don't have the 800-pound gorilla of the Fed sitting on the bond market, and maybe other central banks will start to dial down their large-scale assets.
Ferro right now is writing on manuscript Drawdown Meditation, Bob. It's going to be a really important book. I think Barnes & Noble is like waiting with boxes and boxes of it. You got to do a book, Bob Michael on MMT. That would be just wonderful. It would really work. With JP Morgan Asset Management, they've been on fire with some real intellectual effort here. Lisa, I go back, you dovetail Bob Michael there with some investment theory, and I still go back to David Stubbs on productivity. I thought was just lights out the other day.
Yeah, but if you have that productivity boost and you have very easy monetary conditions, do you end up with a faster pace of inflation? It might be good inflation or better inflation than people had previously expected. I mean, the question marks around this market are dramatic. I've never heard of such wide differentiated opinions.
You're 100% correct, but we don't have the time here to talk about it. Let's blow out the ads. But Lisa, what you get is two Americas. You get an America that is benefited by all this.
You get the America that has access to some of this equity and bond market performance and those that have not. But this is a big discussion. We'll have to have it at another point.
The 10-year real yield, negative 1.02 basis points. That is historic. Stay with us. Lots going on radio and television. Futures flat. This is Bloomberg. Good morning.
With the First Word News, I'm Rich Kigup. The House has adopted that $3.5 trillion budget resolution backed by President Biden. For now, the agreement puts a test rift between progressive and moderate Democrats. House Speaker Nancy Pelosi was able to broker an agreement that would allow the House to approve a separate $550 billion bipartisan infrastructure bill by the end of next month. And Senate Democrats are pushing a new plan that would penalize American companies that shift profits abroad. In a draft proposal released today, Senate Finance Committee Chairman Ron Wyden outlines his vision for how to reform the global tax system for multinational corporations. Democrats say that for decades, companies have been allowed to move profits and jobs outside the U.S. And President Biden is sticking to his plan to remove all U.S. troops from Afghanistan by August the 31st, but he's ordered his national security team to come up with contingency plans if he decides a delay is necessary. The president says that completing the U.S. mission by the deadline depends on the Taliban continuing to cooperate and allowing access to the airport for those the U.S. is evacuating. Johnson & Johnson says a booster of its COVID-19 vaccine provided a rapid and strong increase in antibodies. That's seen as supporting use of a second shot amongst people who previously received J&J's single-dose immunization. Early data shows that a second shot led to a 9-fold increase in COVID-fighting antibodies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Several thousand Americans have been safely evacuated from Afghanistan, and to include, several hundred just yesterday. were able to get onto the airport for follow-on transportation. So it's every day we are moving Americans out of the country.
This is a different spokesman. He is John Kirby, Admiral Kirby of the Department of Defense in the United States Navy, and he actually has a history of moving bodies around under huge stress. Frankly, that's very different than what we've seen from so many administrations, working with Chuck Hagel years ago. Emily Wilkins knows this with Bloomberg Government. We're thrilled she's with us. The market's flat right now. We'll give you more on the markets here in a bit. Emily Wilkins, a guy like John Kirby knows it's chaos. What is the Biden administration doing so that they listen to the Secretary of Defense and listen to Admiral Kirby about the steps forward?
Well, at this point, we are seeing the Biden administration under lots of pressure from lawmakers, from international leaders with the G7 to really go ahead and to make sure that they are extending that August 31st deadline. But at this point, President Biden and others in his cabinet have said that that's not necessary, that they are going to be able to get everyone out by that August 31st deadline. Mind you, that means getting the American citizens in Afghanistan out in the next couple days so they can go ahead and then get them U.S. soldiers out.
In all your reading, it's completely unfair question, but it's Unfair Wednesday. Emily, is the issue here Kabul in the airfield, or is the issue getting Americans from, say, Herat over to Kabul to get out?
I mean, definitely the airport is a huge issue here, making sure that they have access. You actually heard calls yesterday from Republican Senate Leader Mitch McConnell saying that they actually need to send soldiers out into Kabul to make sure that people can get to the airport safely, that they can get into the airport and on the plane, because that's been a sticking point for a lot of individuals as well. You're also seeing the President Biden talk about contingency plans. He's asking those in his administration to come up with those should they decide within the next 6 days that they do need to extend that August 31st deadline.
How much pressure is he coming under, President Biden, with respect to international allies? The idea here that they're saying you guys need to remain in there for a bit longer and make sure that everybody who was an ally or a cooperator can get out safely.
This is immense pressure that's coming from the international community. We saw that in the statement from the G7 yesterday, but it's also immense pressure coming from within his own party. I talked with a number of congressional Democrats yesterday who said that August 31st is not enough time, that the Biden administration needs to extend that deadline. I mean, these are bipartisan calls. They're coming from within Biden's own party. There's a lot of pressure on him right now to go ahead and to extend it, which is why I think we heard him yesterday talk about the contingency plan. And I think this is something we're just going to be able to have to continue following in the next couple days to see if the administration does change its tune on when they are going to have that deadline.
In the meantime, Emily, we have seen President Biden's popularity dip a bit, and this raises questions about his agenda, in particular the $3.5 trillion resolution that was passed by the House yesterday. What do we have in terms of a sense of what impact there will be from the decline in popularity, from some of this controversy on the agenda? This has been a big question. It's hard to really parse out the answer.
I think what's good to keep in mind here is that while Democrats are upset with what's going on in Afghanistan and will be demanding oversight and answers about why this withdrawal was as messy as it was, Democrats want that reconciliation plan to pass. Yeah, there's debate about exactly how much money they need to spend, somewhat much less than that $3.5 trillion, but they do want to expand Medicare. They want more child care. They want elder care. They want certain aspects of climate change. And so to a certain extent, Democrats don't want to see reconciliation go down just because Biden's approval ratings have dipped. They think that that's going to really help them in the midterms. And the lawmakers who I've talked to yesterday, they really said that this is sort of two separate tracks, that yes, they are going to keep focusing on Afghanistan, but that really doesn't impact the fact that they are moving ahead, doing lots of work right now behind the scenes to get the details of that reconciliation package nailed down.
Emily, I want to follow on to what Lisa was hinting at as well, where I think a lot of analysts are concerned and questioning that Biden said that his strength was foreign policy, that there would be adults in the room, that this was his best showing, and this is what we're getting. Are there concerns now that this is his strength, and how does that hurt him here at home?
I mean, absolutely. I mean, the idea that Biden was someone who has, been in government for a very long time, who's very competent, who knows sort of how to make things work, and then to see this is definitely shaking confidence in Biden. And as Lisa just pointed out, we have seen that in the approval and disapproval ratings for the president, and that definitely is going to have an impact. I mean, it's something that I've talked to Republicans, and they say, yes, this is going to be an issue throughout the rest of the year, throughout 2022. It's something they're going to be reminding voters of. At the same token, though, I mean, most Americans, if you ask them what their policy priorities are, they're much more likely to talk about domestic issues before they talk about international issues. And while a lot of the images that we're seeing right now from Afghanistan are gut-wrenching and heartbreaking, at the same point, there is a question about how much those images are still going to be in the news, in the media, how much Americans are going to be reminded of them come November of 2022.
Emily Wilkins, thank you so much. Greatly appreciate it. Bloomberg Government, an eventful Wednesday in Washington. Lisa, we got to go to the markets here, and I really want to go to all the different equity opinions we've seen now. I got heated opinion yesterday from bear market types pushing against so many of the bullish tones, the upgrades that we got. But Lisa, let's talk about it quickly. UBS, Chris Harvey, they got it wrong. Chris mentioned that on this show. We thank him for his candidness. They got it wrong, and man, with a vengeance, did they come up.
Yeah, they became one of the biggest bears, and now they are the biggest bull. Though, taking a look at the uncertainty, Tom, if you take a step back, some of the articles that have recently been written to talk about how during the pandemic, the one thing that equity analysts got so wrong were the earnings, and they vastly underestimated how high the earnings would be. And so their valuation expectations, they were valuing stocks way too high relative to where they actually were, because the equity was that much higher in terms of value. So if you take a look at that, people are looking at where we are now and saying perhaps it's not as expensive as it seems. Again, uncertainty.
Well, but the nuance here, Taylor, is John Golub leading the way with a 5,000 out. I think it's 18 months. But the basic idea of, the numerator moves, earnings move, price moves, but also with the denominator moves in earnings. But I flunked. I got that question wrong, Taylor, on
price
CFA.
Divided by earnings.
Thank you. There it is. Thank you. Clarity with Taylor Riggs. Never have her on again. But Taylor, the key thing here is Golub looks for margin coming down.
Yeah, margin compression along with peak growth is certainly things that we have been talking about, but you would argue, how do you get that when you have a discount rate at 1%, 130 on the 10-year? How much of that is still a boost for equities? We are nowhere near yields being a headwind to some of these equity prices when you think about discounting some of those cash flows back to present value, Tom.
See that, Lisa? She put me,
No,
price divided by earnings.
It's tough. It's tough, Tom. It's a tough day.
It's like, coming up, folks, in our next hour, Taylor Riggs on the 5-ratio DuPont ratio theories.
I can recommend a meditation book written by
John
Ferro to sort of calm your
drawdown meditation. It's been quite a drawdown in the SPX.
Well, we'll discuss it. We'll meditate.
This is Bloomberg. Good morning. Good morning, everyone. Bloomberg Surveillance. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Mr. Ferro is off. Taylor Riggs helping out today, and that is a good thing. We're going to get to a really important conversation here. Just a wonderfully unique expert on the geography of Central Asia, what it means for not only our financial system, but also our political system under siege in Washington. But first, a quick look at the markets. Flat is the way I'm going to put it. We've devolved to red and green on the screen in the equity markets. Of note, Lisa Abramowicz and I note the yield of 1.31% on the 10-year yield. We've got yields. I mean, Lisa, yields are creeping away.
Yields are creeping away, and to see the corollary effect on stocks is interesting, given the fact that people were sort of wondering, well, yields can rise as long as it's slow and not affect stock valuations. I want to also just note crude turning higher on the day, a third straight day of gains after being lower earlier in the session.
71.37 on global Brent crude oil. Romaine Bostic with the individual stock story. Romain, what do you have?
Hey, good morning, guys. Let's start off with J&J. Of course, a lot of talk here about those booster shots. We know the U.S., of course, pushing to start booster shots for Moderna and Pfizer vaccinated folks starting September 20th. Now J&J throwing its data onto the pile, basically coming out with a report here on an early stage clinical trial about a booster for its single shot immunization here. It showed some very promising results here. Of course, there is no formal request yet to include J&J in this booster program, but obviously J&J wants to be a part of the conversation here. J&J shares up fractionally here on the day. Keep an eye on the Chinese tech stocks because that big rally that we saw over the previous 3 days, that ran into a little bit of a speed bump. We heard from the SEC chair, Gary Gensler, late last night, basically saying that a lot of these companies really need to be a little bit more transparent, a lot more transparent here about their financials here. He did not map out any specific regulations here, but again, another regulatory shot across the bow for anyone trying to buy into this dip. A big warning here that you certainly have to be careful, Tom. And keep an eye on JW Nordstrom. We got the earnings late last night. Overall, they actually beat on most of the metrics here, but analysts seem to be drawing a lot of comparisons here to 2019 levels, saying the company not back to where it was, particularly at a time when competitors like Macy's and Kohl's seem to be making ground here. Actually, JP Morgan wasting no time downgrading the stock today to underweight. Deutsche Bank lowering its price target slightly. Flip of the board, Tom. This is for you. You don't talk enough about meme stocks here on
we do not.
Surveillance here, but don't worry. This is all we talk about on the close. Taylor knows this well. Revenge of the meme stocks, Tom. Yesterday, AMC was up more than 20%. GameStop was up more than 20%. You got AMC now back above 40, Tom. You missed your entry point. GameStop back above 200. Both of these stocks higher here in the pre-market, setting up for what could be another interesting day of gains. And Express, another meme stock, 6 straight days of gains, Tom, here on Express. And guess what, Tom? This is about fundamentals. They actually reported earnings, 42% jump in comp sales, and a surprise EPS.
Oh, man.
Profit.
Taylor, you
Everyone
have to
was
work with
expecting
them
a loss.
every day?
Yes, I know. It's yeoman's work for her, by the way.
My deepest sympathies.
That's why she's here in the morning. I think she's looking for a transition, Tom.
We get all the fun memes in the afternoon.
That's our meme stocks for August is what we just did there. Romain Bostic, thank you so much. This is a really important conversation. It is typically done at Davos. It is maybe done at Jackson Hole. It is done at world meetings where she holds court with profound and original perspective, I should say, on Central Asia. Afsani Beshlov is with Rock Creek, their chief executive officer. Yes, very good on investment, expert on natural gas, but also expert on her Iran and all of Central Asia, and it is in crisis. Ms. Beshlov, thank you so much for joining us today. You know, back to the 1950s, the Iran, Pakistan, India gas pipeline. You've lived it at the Khyber Pass in West Pakistan, the romance of the British, the great game, and all that other malarkey. Is China going to come in and take over the vacuum of the Iran, Pakistan, India pipeline as the U.S. exits?
Tom, you always go straight to the point of the matter, and it is really interesting. As you said, I've studied these natural gas pipelines going through all the way in Asia, but also in Europe. And no question that geopolitics is always more important than the physical aspect of these things. China is seeing a void. You know, we saw the Russians losing Afghanistan. We saw us pulling out as we speak. And no question that the Chinese are seeing a big void. And they will take advantage because they will need a lot of energy to continue their growth. And they know that natural gas is part of that solution to their coal problem.
Our core memory here is cobalt in Africa, how the Chinese came in and worked out long-term contracts on obscure minerals. How will they work with the Taliban? Will it be the same method? Long-term contracts with some things on the back end that maybe will give them an advantage?
You know, again, I'm not an expert on working with the Taliban, but I think what we're seeing this time round is that the economic thinking on the Taliban side is not something that is clear, at least to the rest of the world. They're not a group that worked closely with the World Bank or with multilateral institutions or with aid organizations. So we have no idea how they will really behave when it comes to having international agreements, if any, and to sticking to it. So those, I would not really think about relying on. I think the question is, where does the pipeline go? It doesn't have to go through Afghanistan.
In the meantime, Asfane, we are looking at a Jackson Hole that has a very big effect, potentially at least, on the international community, at least the international community that does fall within the international banking world. There is a question of whether any kind of taper announcement would affect the international community arguably more than even domestic markets in the United States. What do you think?
You're so right, Lisa. I think the whole international point of Jackson Hole has been a little bit diminished in the last few weeks, and people have not been talking about it. I think a lot of people are disappointed not to be there in person and for it to be virtual. But I mean, my own thinking is that tapering is not going to start in this meeting, and I don't think that Jay Powell is going to go there at this meeting. Is more likely in November, December. But no question, the conversations that usually take part in Jackson Hole at the margins are going to be the ones that will decide in terms of how the central bankers are communicating with each other, not just to the rest of the world. And those are the ones that I would watch for. And again, I don't think that they will be talking about it too much, about U.S. tapering at this particular meeting this Friday.
Okay, so let's say you're correct and the Fed does follow that timeline. What are the ramifications for emerging markets, for asset prices, following a slowdown in these bond purchases?
As we've seen, a number of emerging markets have been already starting to increase their own interest rates. We've seen that happen over the last few months, and we've seen actually some more tightening in emerging markets. Again, as the usual sort of course of things, the emerging markets that have a lot of U.S. denominated debts and do not have a lot of exports that are U.S. dollar based will be the ones to get into difficulty. I think given the way tapering will happen, which is probably incredibly gradually and not sudden, probably the impact on emerging markets will be something that is slower. The third job of the Fed, which is stability of the global economy, the U.S. economy, of course, but also the global economy, will not be something that Jay Powell will be forgetting to consider.
We've been having a lot of conversations about moral hazard. What is the level and the risk right now of moral hazard if we don't do something, if we don't taper as quickly as we should?
I think the big problem, if we don't start tapering, whether it is in October or November or December, more likely November, December time, is the pressure of inflation. Again, our thinking at Rock Creek and my thinking is that the supply chain problems are so huge, so overwhelming, number one, and all the other things that are going on in terms of COVID-related problems in various economies, that they are the things that are governing price increases much more than typical inflationary pressures. So the issue really at hand is whether we are too late to move, but in general, inflation is a slow process. And if we see it take off, I think Jay Powell and his colleagues at the Federal Reserve have lots of tools to catch up quickly if they need to. So not so worried about moral hazard.
Dr. Beschloff, thank you so much. Greatly appreciate it with Rock Creek this morning as we go to Jackson Hole. We really, with all the distractions, Lisa, we really haven't talked much about it. We're 2 days away from the Powell speech.
Yeah, and the expectation is for it to not be that newsworthy. However, there is so much. I agree with that. I agree with the because it basically indicates this level of surprise that could potentially be there. The market response to that, also a potential surprise. But how much hinges on Fed policy? I mean, what is your impression of what a tapering would do at a time when the supply of treasuries coming out is declining? I mean, all things being equal, could it be a maintaining of the policy if they start to curtail the bond purchases on the margins?
Yeah, I think people understand. I'm in the camp. I don't think it's a big deal. But Taylor Riggs, what's so important here is not the tapering, but the calculus of the tapering. If they come out and say the first and second derivatives of those flows are going to be gradual and not damaging, that's mission accomplished.
And I've increasingly heard that the taper tantrum is behind us. We already had it. Yeah, you could react a little bit to Lisa's point, maybe some complacency in the market, but the slow and gradual, and dare I say, Tom, equal, as I've been pressing a lot of our guests on, do we do a equal treasury, equal mortgage-backed security? I think consensus is steady as she goes.
Yeah, we don't do mortgage-backed securities. It's too early in the morning. Lisa, what's important here is it's non-linear from a negative 1.01% 10-year real yield out to, say, a negative 0.30 10-year yield. It really picks up with a wallop as you narrow that gap.
Yeah, I got to tell you, Tom, I wrote this column about inequality and some of the ramifications of Fed policies. The pushback dramatic, and I thought it was fascinating how many people challenged the assumption that Fed policies.
What is this, a marriage? We're doing 3 shows this morning.
Well, yeah. Have some tang, meditate, kumbaya.
Well, I'm reading John's draft. The galley's quite good, actually.
Oh, good. I'm glad.
He's so cut and chiseled.
With the First Word News, I'm Rishika Gupta. The Biden administration has told refugee aid groups to get ready to help resettle as many as 50,000 Afghans. The refugees are being admitted under a program known as humanitarian parole. The program would target Afghans considered to be at risk under a Taliban-led government. The House has adopted that $3.5 trillion budget resolution backed by President Biden. In effect, lawmakers approved the resolution without directly voting on it. House Speaker Nancy Pelosi avoided a showdown and used a procedural maneuver that deemed it passed once the House adopted a rule governing debate for the 2 other bills. Next, committees will write the details of the budget framework into tax and spending bills. Democrats will use the reconciliation process to push it through the Senate without the threat of a Republican filibuster. In Vietnam, Vice President Kamala Harris stepped her criticism up of China. Harris urged countries in Southeast Asia to apply more pressure to Beijing. She also said the U.S. wants to upgrade its relationship with Vietnam to a strategic partnership. The U.S. may give Vietnam another former Coast Guard ship and is donating more coronavirus vaccines. Securities and Exchange Commissioner Gary Gensler chair warning hundreds of Chinese companies listed in the U.S. submit to more scrutiny or get kicked out. He told Bloomberg, quote, "The clock is ticking. The SEC plans to enforce a 3-year deadline that requires Chinese firms to permit inspections of other financial audits." Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
I think this market, it's priced to perfection, and if I look outside the window, life is not perfection. So my team just started getting a little nervous about this equity market in the last couple of weeks. Doesn't mean we're going to be underweight, but we're certainly not going to be overweight and going into the fall, and especially going into the Jackson Hole on Friday.
Christopher Ailman, with a lot of responsibility there in the pension area. His goal is to make the actuarial assumption, and the other goal is to try to be in the markets that are surging. Always an interesting conversation. Lisa, I forget about the actuarial assumption. It's been the miscall of the last 20 years. It's a single-digit world. Yale with a wonderful turnover after the tragic death of David Swenson. I mean, we forget there's a huge institutional body watching the show, listening on radio, who really care about making the 6% bogey.
6%, and that's down from 7.5%, which is down from 8%. How do you even get 6% exactly in a yielding world of a 10-year at 10 at such low rates at 1.3%? I got to say, though, he was making the point about the economy and how the real economy does not reflect the rosy scenario that you're seeing in markets. The stock market is not the economy. How much they diverge and what that means remains to be seen. How closely we have to track the economic data and what that means for markets is getting less and less clear, Tom. This is setting up a new playbook for a lot of people.
Which is the cart and which is the horse, and then they move around, which is completely unfair. Someone that is grizzled on this, and he wrote that famous equity book, Horse Before Cart. David Wilson joins. And David, you and I, we're going to tear up here. I'm already getting a little weepy-eyed because we're going to be talking about something from another time. Margin debt. Have you ever had a margin call?
I can't say I have.
I've enjoyed a margin call. They're no fun.
Yeah, but I've never borrowed to buy stocks either, so that would explain why I've never had a margin call.
And I enjoyed losing money, I should point out.
Oh, yeah.
Continue.
Whatever does it for you. Let me tell you, you go through the monthly numbers that come out of FINRA, the Financial Industry Regulatory Authority, and they went up for 15 months in a row, starting in April of last year when basically the bull market in U.S. stocks
leveraged up.
Yeah, absolutely. In fact, you're talking about an 84% increase over time. But that stopped last month, and that's got Bank of America's Stephen Sutmeyer thinking that, maybe we've reached a peak in margin debt. And he's done the historical analysis that shows when you get to a peak like this, assuming it is this time around, not a good thing for stocks.
But is it a changed milieu? I mean, with ETFs, with a percentage of the New York Stock Exchange that is not individual securities, you've got a diversified input into NYSE. I mean, does margin debt still matter like it did in our youth?
I mean, it matters. It's just that it's one of a number of indicators, arguably. You have to remember that. I mean, that was even true back in the day. But now, you can look at, companies that have come public through SPACs, and they've been down recently. There are all kinds of ways that you can see that investors are taking less risk. Volume, the amount of trading going on in U.S. stocks, not what it was a few months ago, going back to February. So, there are any number of indicators that analysts are pointing to, suggesting that, even though the S&P 500 keeps setting records, number 50 for this year coming up yesterday, that there's not necessarily a broad strength in the market, and then you throw the margin debt numbers on top of that, and it's another reason for concern.
Concern meaning what? That we're not going to necessarily chart another 15 new highs in the next 2 weeks, or a concern that we're going to see some sort of drawdown that will be a buyable dip? I mean, it doesn't seem like concern is translating into anything that is significant in terms of what a potential drawdown would look like.
Well, maybe not at this point, but you do have to remember that, going back, last October was the last time you had a drop of 5% or more in the S&P 500. At some point it has to happen. So, people are kind of looking for signs, arguably, that it's coming. And, the drop in margin debt, 4.3% that we saw in July, is being interpreted, at least at Bank of America, as one of those signs.
Dave, what is the AAII survey telling us in terms of the difference between how institutional investors are bullish or bearish and what the retail investor is thinking?
Well, just taking a quick look at the numbers, Taylor. I mean, boy, you talk about sort of an even split. In terms of whether, the retail investors, the individuals are bullish or bearish or neutral. It does show you that, the bearishness has come up, but, it is a pretty even split. And, arguably, that's, reflected in the kind of contrast we're seeing between the performance of the S&P 500 and some of the indicators that are out there.
David Wilson, thank you so much. Back to margin debt. Margin debt's tough. There's an academic paper, Lisa, out years ago, and I unfortunately can't cite it, but basically it's 1.38 to 1. There was a lot of work done. I think it came out of Vanderbilt, is my recollection, where when you get out over margin exposure and leverage exposure of 1.381, you've just got a timeline to where bad things happen.
Well, and there's also an issue that Dave Wilson kind of raised implicitly, which is what is the leverage being built into markets? Is that leverage coming out of the system? And you are seeing that on margins, whether it's the SPACapalooza, is that what you called it? Or if it's the margin debt that's starting to come down, how much are we seeing those pockets of froth kind of slowly deflated? And at what point does that gain steam? At what point is there some sort of seismic jump in the response in markets?
Dead on, but to both of you, I'm sorry, it goes to the family office debacle at Credit Suisse of a bit ago. Taylor, we didn't have transparency of margin, did we? We didn't have transparency of leverage.
Yeah, that is certainly the case, though I continue just to go back to what Bob Michael says, Tom, about moral hazard and what is the risk. I think Muhammad El-Arian has also been really strong on this. What is the risk of not doing something? And Lisa, to your point earlier, I think you asked the question, if it's not doing a lot, $120 billion a month, Why are we still doing it? What is then the risk of a small little taper if it's not that big of a deal to begin with?
Yeah, so I wrote this column, right, about inequality, since that is the topic of discussion at the Fed. And I bring this up, it's relevant to what you're saying, Taylor. This idea of what effect has the Fed had on markets? What effect has the Fed had on inequality? And I got to tell you, I was shocked, Tom, at the degree of response and, frankly, the bifurcated responses. Some people saying yes, and other people saying, how could you? The Fed hasn't had that big of an effect on stock market valuations. They would have been this high anyway. I mean, that, to me, highlights how much disagreement there is on basic assumptions that a lot of people talk about.
You know, I would assume this will come up at Jackson Hole, not in the speech, but in the papers. And the basic idea is what's the mandate of the Fed? And again, the mandates of the different central banks are all different, but they center around jobs and inflation / rates.
Yeah.
Where's inequality come into that mandate?
Exactly. How much are we dealing with commission creep, right? How much are we dealing with a Fed that is making itself vulnerable to politicization? But at the same time, how much are they basically just financing
Taylor,
what the
weigh in here.
fiscal
What do you
government
think?
is?
Do I have to weigh in? 8 a.m. I'll do it.
Okay.
Moral hazard. I'm on Team
It's a
Bob
moral
Michael
hazard.
of J.P. Morgan.
Well, and again, that comes back to the basic idea here, expect the unexpected, which we will do into Q4 and really into an exciting and interesting 2022. Truly, these are historic times. Red and green on the screen here. The yield is the story of the day, 1.31% on the 10-year. Ferro may have to come off his writing vacation. This is Bloomberg.
Yeah.
The powerful growth will continue into next year, and it is still too early to get positioned bearish on the market.
This growth could be extended as we continue to deal with the push-pull of COVID.
We agree with the stock market. I think earnings growth, not valuations, will drive markets higher next year.
The Fed starts to taper in November, maybe December, but either way, they're tapering.
We're at an interesting point right now with Chair Powell and the Fed in the crosshairs of what's going on in Washington.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning. Countdown to a virtual Jackson Hole. This is Bloomberg Surveillance on Bloomberg Radio and Television. John Ferro, Tom Keene, and Lisa Abramowicz. John Ferro off today. Taylor Riggs very much in on this day of a deepening consensus that every dip will be a buying opportunity. Tom, we see a turn to markets, and yet those upgrades continue to come out as people expect stocks to continue to do well, regardless of whatever else happens.
And on economics, a lot of people publishing Andrew Sheets coming up in moments. Lisa, moments ago, Stephen Englander with a blistering note from Standard Charter. The great Englander looks for dollar negative. He says this is a Fed that can't be aggressive. They can't be hawkish. He sees the first estimate for non-farm payrolls September 3rd and says it ain't happening.
Yeah, how much is Countdown to Jackson Hole going to become Countdown to the August payrolls report, Tom, as people take a look at the jobs market as the main factor driving what the Fed says.
Better said than Ferro could do it.
Well, I don't know about that. He's off meditating. We'll have his take when he comes back. But Taylor, honestly, we were talking about meme stocks when we were making fun of them, but how much does this indicate sort of the peripheral desire for stocks at a time when it seems like you can do no wrong? I mean, how much are you seeing retail traders dive back in as they see things continue to climb any wall of worry?
Anything that I can do to get a little meme stock in the morning as we migrate forward, of course, to the afternoons on 2 to 5. But Lisa, you bring up a great point, of course, as we think about some of the retail buyers back in this market, but really the savings rate that we've had, how many people have been more wealthy coming out of this pandemic. Of course, the savings, putting that money to work, and what is fueling this market higher. You certainly see that pretty much across the board.
And there's a question, Tom, about the influence of the Fed, and we could talk about moral hazard, we could talk about what they should do, but what they are doing to the markets is also a huge question at a time of low interest rates, but also incredible corporate profits, which has been really arguably the main driver of what we've been seeing in the equities.
And the cash flow and the calculus of those cash flows, I know Andrew's going to talk about this, but Lisa, to me, what is so important here is what corporations are doing and how they adapt to this pandemic.
And the idea that the big tech world is basically accounting for such a huge proportion of those cash flows with a smaller proportion of employees. What does that mean for productivity, but also distribution of wealth.
Quick data check here. 10-year yield higher today, 1.30%. We had a 131 earlier. 30-year bond not out to 2% yet, but 1.91% gets my attention. With us now, Andrew Sheets of Morgan Stanley, Chief Cross-Set Strategist in charge of herding cats at Morgan Stanley. What's great, Andrew, about the Morgan Stanley view as invented by Dr. Roach is everybody argues and argues and argues, and then you try to get in the vicinity of the same James Gorman page. What's the disparity now in your wonderful collegial debate that Steve Roach invented? What's the distinction of the Morgan Stanley in-house debate?
Yeah, thanks. Good morning. It's nice to be with you. So I think there are a couple of areas where we differ. I think we're more bullish on the dollar than many investors. I think that's linked to the idea that we do think the Fed is not just going to be embarking on a tightening cycle, but that tightening cycle will continue to be well ahead of many of its major DM peers. That's one of the reasons I think we're more cautious on emerging markets than maybe other investors out there. And, I think when we look at global equity performance, we are really forecasting underperformance of the U.S. equity market relative to what I'd call kind of DM ex-U.S. market. So, Europe, Japan, Australia, we think those are the markets that have already derated, that have good earnings growth, and will have very easy policy over the next 24 months. And we think that will ultimately allow them to outperform the U.S. market.
Andrew, given the fact that you look across assets, how much are low yields indicating something of a warning sign at a time when a lot of people are forecasting big earnings growth and some kind of recovery that actually, even if it slows down, is still robust?
Yeah, I think it's really fascinating, right? So there's definitely the storyline in the market that nothing matters because of QE, because of low yields. And yet the market has really taken a hammer to many cyclically related assets. Lumber prices are down 70%. Iron ore prices, were down 30% recently. Stocks in China were down over 20%. Small caps in the U.S. have been dramatic underperformers versus large caps. And so, I think all of that is actually very consistent with the market still being concerned around growth. I think that's also what's reflected in the yield story, that I think plenty of investors are still worried about some combination of the growth story and the margin story. Ultimately, I think the most effective way to think about this is that it's not about major risk to growth, but it is about a usual transition the market often sees as you come out of recession, as you start to see prices rise, as that starts to squeeze margins. That does drive more differentiation. But I would say there are plenty of other indicators in the market that I think reflect some of the same growth fears we're seeing on the yield side.
Are you seeing that within leverage? Are companies responsibly paying down some of the debt, or are we still borrowing because it is free to do so?
Well, I think what's actually been remarkable is companies have still been pretty responsible, despite the fact I think you could argue this is the best time it's ever been for companies to borrow. I mean, we have the lowest yields in the U.S. since 1953. You have on a nominal basis, adjusted for inflation, adjusted for growth forecasts, those yields are even more attractive. And so far, a lot of the issuance has still been to refinance debt, pay down old debt. But I think that will change. I mean, we think that issuance picture will get more aggressive going forward. I think companies are going to look at this and say that this is really maybe the, kind of the last train out, or one of the last best opportunities to borrow money at these historically low levels, as the Fed's starting to shift policy, inflation starting to pick up, and there are, opportunities to deploy that money in either buying a competitor or doing your own capital expenditure.
To a theme that we've talked about, Andrew, and this really folds into your research note as well, which is the nonlinearity of moving from the fiction of the real yield now to some form of normal real yield. There's no evidence I see in the research that that's a linear function. I want to pin you down here. On a 10-year real yield, negative 1.02%, where does the nonlinearity kick in? Is it at negative 0.75? Is it negative 0.50? Or is it sometime when Red Sox pitching gets good again? Which is it?
So I think for certain segments of the market, I think if you think about kind of the NASDAQ, the growth complex, I would put Taiwan equities into there as well. Some of these, I mean, there's a real bifurcation. There are many parts of the market that are trading with a negative correlation to real rates. and others that are trading with a very positive correlation. And so if you think about when is the market going to start to, I think, rotate out of some of those very kind of highly correlated to yield segments, I think it would happen very quickly as yields start to move up. Again, I think that they are very extreme. I think once they start moving, they could really start moving. That's certainly the view of my colleagues, Matt Hornback and our global macro strategy team. And you have, I think, a number of assets that have, I think, really been showing you that they are sensitive to those even relatively small changes. So sure, maybe the first 10 basis points the market could ignore, but I think beyond that, the market would actually switch back into that rotation quite quickly.
Andrew, dumb question Wednesday. Why buy bonds at all? Why not just have cash and stocks at this point?
Well, I don't think it's a dumb question. We're underweight bonds because we forecast worse returns than cash. So now I think that where there's an important asterisk is that further out the yield curve, I think you have more and more buyers who are buying those bonds for regulatory reasons, not total return reasons. They're buying it to match a liability. And so that does probably give more support to the longer end of the bond market, the longer end of the corporate bond market than might be there for economic reasons. But, on Morgan Stanley's forecasts, bonds are going to underperform cash over the next 12 months. So we don't think investors should buy them. We think investors should be underweight.
Andrew, thank you so much. Andrew Sheets with us. Nice update there from Morgan Stanley. I know that Mike Wilson, his colleague, still with some real caution about this great bull market as well. Lisa, I think the Englander note is really, really important. He speaks there about beginning to frame up what September 3rd looks like, and then trying to figure out in some way what Jackson Hole and what the Fed will do.
There have been a number of studies coming out showing that the states that ended the enhanced unemployment benefits earlier actually saw consumers spend much less, and they didn't necessarily get into the labor market that much more quickly. So there is a question of how much of a drag on the consumer this will be. And he sort of is highlighting that degree of uncertainty at a time when the Delta variant, yes, it's on the wane in certain states, but how much are we looking at the potential for this to dampen some of the jobs market momentum that we've seen so far, Tom?
It'll be interesting to see. Taylor, your thoughts here, please, on getting to the jobs report in a market that's out 2 standard deviations plus. I mean, it's amazing the linkages right now.
Yeah, it is amazing as you think about where we are in terms of the bulls and the bears, and I reiterate comments every time in the afternoon. It is just fully invested bears that are in this market. Frankly, because of some of the acronyms that we joke about, there is no alternative, Tina, but you could argue that that is an acronym within the bond market itself as well. Lisa asked the point, why buy bonds? Just buy equities. Well, bonds after inflation are giving you zero.
We've been making jokes about it, but let's stop the show here, Taylor. What are the memes actually doing right now? Are memes back in vogue?
They're back. I just got a report from Vanda Research 3 minutes ago in my inbox. AMC, one of the most actively traded yesterday, Tom.
Oh, good. So we covered that. Did we check that box, Lisa?
We checked it.
Thank you. We checked the box. Taylor Riggs adding value. Ferro never would have done that.
No. Value add.
Where are we here? Futures flat. Dow futures up 5. The VIX 17.35, very interesting this morning, and the dollar was a little bit of stability, 93 on DXY. This is Bloomberg.
With the First One News, I'm Rishka Gupta. President Biden is sticking to his plan to remove all U.S. troops from Afghanistan by August the 31st, but he's ordered his national security team to come up with contingency plans if he decides that a delay is necessary. The president says that completing the U.S. mission by the deadline depends on the Taliban continuing to cooperate and allowing access to the airport for those the U.S. is evacuating. The House has adopted a $3.5 trillion budget resolution backed by President Biden. In effect, lawmakers approved the resolution without directly voting on it. House Speaker Nancy Pelosi avoided a shutdown and used a procedural maneuver that deemed it passed. Once the House adopted a rule governing debate for 2 other bills. Next, committees will write the details of the budget framework into tax and spending bills. Democrats will use the reconciliation process to push it through the Senate without the threat of a Republican filibuster. Senate Democrats are pushing a new plan that would penalize American companies that shift profits abroad. In a draft proposal released today, Senate Finance Committee Chairman Ron Wyden outlines his vision for how to reform the global tax system for multinational corporations. Democrats say that for decades, companies have been allowed to move profits and jobs outside the U.S. And Johnson & Johnson says a booster of its COVID-19 vaccine provided a rapid and strong increase in antibodies that's seen as supporting use of a second shot amongst people who previously received J&J's single-dose immunization. Early data shows that a second shot led to a 9-fold increase in COVID-fighting antibodies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
We need to find ways to pressure and raise the pressure, frankly, on Beijing to abide by the United Nations Convention on the Law of the Sea and to challenge its bullying and excessive maritime claims.
Vice President Harris on her tour and speaking here on some of the important issues, widely anticipated trip, I should say, drowned out by all going on in Afghanistan. Last night there was pageantry, and one of the things Greg Villiers is very good at is getting out the calendar. He writes an incredibly important terse note each morning for AGF Investments Toronto, and we're thrilled he could join us this morning. Greg, I'm going to get out the calendar. Tip O'Neill exited at 75 years old. Speaker Pelosi of Baltimore and San Francisco is 81 years old. Is she legacy building with this legislation?
Yeah, I think, Tom, good morning. It's one of her objectives. She obviously wants to get a bill, but I think there's a decent chance after the 2022 election she will step down.
Well, she'll step down, but does she step down as a minority? I mean, is she, if she's having a cup of coffee this morning with Joe Manchin, they're talking about the future of the Democratic majority in Washington. Did she risk it last night?
Well, I'm in a minority, I guess. I do not think last night was a victory for her, Tom. I think there's a fatal flaw in the logic of House progressives, and that is they don't, I think, appreciate the fact that the Senate has a couple of Democrats who will not go along. So this reconciliation process, which needs every Democrat to vote yes, I think will not succeed. So there's going to be a knockdown, drag out all during the fall, and you're going to have to give this second bill, this $3.5 trillion bill, a major haircut to get it passed.
Greg, one reason why I love speaking with you is you actually handicap the likelihood that some of these bills will get passed. Based on what we saw yesterday, how did that change the handicap, the percentage chance of the Democrats getting through Biden's $4.1 trillion agenda?
Didn't change a lot, Lisa. Chances of getting the 3.5 plus another $1 trillion, 0% chance. Chance of this whole thing breaking up, total gridlock, 40%. But the 60% chance is that there will be something. The tax hikes are not going to be as ambitious as they were hoping. The spending is not going to be as generous as they would like. But I think we can get something if, and this is the important issue, if Pelosi and the progressives are willing to take half a loaf. If they want everything, the whole thing falls apart.
Greg, how in peril is the $550 billion physical infrastructure bill, given some of the disagreements for this other piece?
It's ironic because a lot of people like this, including a lot of Republicans, like the idea of spending more on highways, dams, bridges, Wi-Fi, water. So that, I think, still has a decent chance of making it one way or another. It's the $3.5 trillion that has every Republican opposed, and more importantly, a handful of crucial Democrats opposed as well.
Greg, can you tell us the issues of why they're opposed? Is it because we're concerned about how eventually we're going to pay for this all?
That's part of it, Taylor. I mean, the deficit, it looks like in a year or two we'll be over $30 trillion in total U.S. debt. That's more money than Tom Keene makes in a year.
Yes,
so I think that part of it is the price tag. Part of it is just a dramatic increase in the role of federal government. And part of it, let's not forget, is taxes. And even Democrats like Joe Manchin don't like the magnitude of the taxes that other Democrats are talking about.
Was this two-pronged approach going to prove to be the wrong way to go?
Well, there's no easy way, and I point out to everyone, the main problem for the Democrats is that they didn't do as well as they thought they would do last November. They lost a lot of House seats. They never expected that to happen. They didn't do all that well in the Senate, so they have tiny, tiny majorities to deal with, and it makes it difficult if you have just one or two moderates who dissent.
I look, Greg, at all of this back and forth, and it's about the clock. When does the 2022 race begin? I mean, my benchmark's Labor Day, but I think I'm wrong on that. Is it March of next year?
Oh, I think by Labor Day they'll be raising money, Tom. But, you know, the real actual campaigning doesn't start until March. If you forced me to make a bet, I would bet the Republicans take the House. Senate is way too close to call. But I think the Republicans have a decent chance, largely because Biden's got problems, whether it's Afghanistan, crime, illegal immigration, inflation. There's a lot that the Democrats have working against them.
Greg, one of the other reasons why it's great to speak with you is because you dovetail Washington policy with the market response, with the market understanding of what policymakers will do. Do you think that Wall Street has it right when it comes to what will get passed in Washington, the magnitude of the fiscal impulse?
I think that maybe Wall Street doesn't fully appreciate how much trouble the stimulus, the infrastructure bill is in. I think there's going to be a lot of agita over the debt ceiling getting raised. But I'd say the big issue is that the stimulus, both monetary and fiscal, coming out of Washington may not be quite as big as the markets were hoping for.
Greg, all in all, what's interesting here is literally like, where are we next week? I mean, very quickly here, what happens now after this vote last night?
Well, committees are now going to be working on bills, putting this all into language.
Really?
Oh yeah, they're not going on vacation. They're working through mid-September to get all the language written. I think the big overall story in Washington right now, Tom, is the lack of political capital that Joe Biden suddenly has. His political capital has eroded dramatically. Even if we get 200,000 people out of Afghanistan, he still is going to bear a lot of the blame, and I think it makes it tougher for him to get his agenda.
An extraordinary summer. Greg Villiers, thank you so much after this important vote for being with us. With AGF Investments, I do want to state we protect the copyright of all of our guests. You can get his wonderful note from AGF in Toronto. Lisa, I said this at the dining room table the other night. It's the oddest summer. It's just amazing what we're in.
The idea also of the fiscal impulse, that everyone expected it to be dramatic. Remember at the beginning of the year, we were talking about $5 trillion, $6 trillion. Is that enough? Should we throw an extra $1 trillion at it? And now we're talking about a significantly lower number than that. And a lot of people on Wall Street are saying, well, it's actually positive because then the tax hikes aren't going to be as big. I mean, the narrative has changed so much, Tom. It's hard to really understand where the direction goes.
I mean, Taylor, on the Delta variant, I guess the reading is it's here, and maybe it's ebbing a little.
It is. You know, I would argue the best thing that we love about the terminals, we have charts for all of this because the data is objective, and you can see a spike up and then a beginning of a rollover, similar to the same way as DES, which are nowhere near where we were before. And so how much can the markets read through that? Everything. Chris Ailman, we had him yesterday at the market close, said we just have to get through it. But I think that this is the new normal.
Lisa, she's a promotion machine for the close. See the close.
It's the new normal.
Starts at 12 noon and goes to 6 p.m. Right on the screen, the markets deteriorate here a little bit of a give back here. Futures, -2. Stay with us. Coming up, I look forward to this. Mark Zandi, Moody's Analytics. Bloomberg Surveillance. Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. John out, Taylor Riggs in for John Ferro this week. We've got data coming out. I'm going to delay like 20 seconds getting into this because in the old days, McKee got all this stuff at 4 a.m., but he doesn't get it anymore, so we're going to let him look 3, 2, one. There it is on durable goods. What are we doing?
Durable goods orders fall a tenth
Nailed it.
of a percent. They were supposed to fall 0.3, so I suppose that's good news.
Good news.
Ex-transport
Price is
up
over.
0.7. So you're looking at a problem with automobiles, is my guess, without going deep into the data, because we can't get the chips to put them out. Capital goods orders, non-defense, ex-aircraft, this is the one economists like to follow. It's sort of a proxy for business spending, is flat. And that's a disappointment because it was up 0.7 last month. It was expected to be up 0.5%. Shipments, which would be this quarter, up 1%, though. That's better than last month's 0.6. So we did get some work in during the month of July, but we did not get a lot done lately is the problem.
Two questions, Mike. One on durable goods, and then I got to sell forward to all your hard work on Jackson Hole. The idea of durable goods in a service sector world like capacity utilization, do we care anymore about durable goods?
Well, we do care because manufacturing goods are on a dollar basis much more expensive. The problem with the durable goods orders is that they're very, very volatile, and so it's hard to separate out whether it's
even in
COVID,
a pandemic, you got to take a 3 month moving average.
And there are always problems with that data, but in a way, it makes factory orders that includes non-durables a little more important.
You start strong, your Tony Lama two-tone cowboy boots, your chaps on, and your cowboy hat, talking to Esther George. So to be clear here, Wyoming is in the Kansas City district.
Yes, that is why
you speak to her tomorrow. Who is she, and why should we lean forward when we talk to this most original president?
She is the president of the Kansas City Federal Reserve. She's normally the host of the Jackson Hole gathering.
But she's cautious. That's
she's
a tradition.
Cautious and has been something of a inflation hawk. So it'll be interesting to see what her latest view is, especially in this COVID world. I just want to point out, Tom, before I go here, interesting headline that we need to follow up on and see what he's actually saying. Philip Lane is the ECB
I have no idea.
chief economist, and he says the ECB is willing to move if Fed policy creates spillovers.
Fascinating.
So what exactly does he mean by
I'm going to interesting.
Everybody watch that.
A research project in August for Michael McKee this morning, and we have someone qualified here, Lisa, to talk to Zandy now about economic spillovers. I mean, he nailed that in school.
Yeah, the idea here of the international interconnectedness of monetary policy and economic recovery. Mark Zandy sifting through all the crosswinds here. Moody's Analytics chief economist, a well-renowned and well-respected economist who has been often cited for being accurate in a time of such great uncertainty. Mark, thank you so much for being with us. We start to look out to September, to October, to November. Regardless of what the Fed does, how can you characterize the momentum behind this labor market right now?
Good, very good. We're creating lots of jobs. We created almost 1 million jobs in July. That's on top of 1 million jobs in June. I don't think we can sustain that pace, but if you told me the economy creates 500,000 jobs per month on average over the next 12, 18 months, that'll bring unemployment back in close to full employment, something kind of in the mid 3% range by late 22, early 23. That sounds about right to me. So it's good.
All right, so everyone agrees that it's good, and the degree to which it is great, or the degree to which we've got a tightness in a labor market that perhaps isn't recognized, is up for debate. However, there is also a question of the enhanced unemployment benefits, what the roll-off will do. Will it allow more people, or sort of push them back into the labor market, or will it simply reduce the buying power of consumers that see some of their income depleted? This is a great uncertainty. Where do you weigh in on that?
Well, around the debate over whether the supplemental unemployment insurance, that's the $300 extra per week that folks are getting in about half the states that is part of the American Rescue Plan, I don't think that had a major impact on the willingness of people to go to work. I mean, that's probably on the list of reasons, but it's towards the bottom of the list of reasons. And we got some data points regarding that late last week. We got state employment data for July, and you could see in July, and you had half the states eliminate the supplemental insurance benefit in July. There was no effect on employment in those states compared to states that kept the unemployment insurance. So So, a lot of data points to come. The script's still being written. We'll see, and I expect we'll see some impact, but it's really on the margin.
Mark, in the depths of 08, 09, you were the reigning optimist. You were the one everybody trotted out to say, you know what, folks, we're going to recover from this. It took some time, but folks, Mark Zandi absolutely nailed the economic recovery of 12, 13, 14, and on. You have a heated note, Mark Zandi, saying, would everybody calm down by the overheating effects of this trillions of dollars of stimulus? Why should I be calm about overheating?
Well, first thing I'd say is there's still a lot of slack in the economy, Tom. I mean, the unemployment rate is still 5.4%. Full employment something in the mid threes, maybe even the low threes. We still have millions of people who stepped out of the workforce during the pandemic who aren't even counted as unemployed. So, we got a long way to go. We're headed in the right direction. We're creating lots of jobs. So we got a pretty deep hole to dig out of. And this support we're talking about now, some flavor of the Build Back Better agenda that President Biden, unveiled earlier this year, that doesn't really kick in until 2023, 2024. And to a degree that, I don't really think that is an inflationary issue. The other thing I'd quickly point out is there's a lot of aspects of the plan that address inflation. So, for example, a big part of the plan is to increase housing supply. And we all know there's a very severe shortage of affordable housing, and that's driving up rents. And rent growth is the single most important aspect of inflation. So, that will go a long way to addressing that particular aspect of inflation.
Mark, there was a folk group years ago called Stubbs, Blinder, and Zandi. They were outstanding. I loved what they did. They played coffee houses all through eastern Pennsylvania. David Stubbs over in London with J.P. Morgan is just brilliant on the technological overlay and our underestimation of productivity. You've studied this with the former vice chairman of the Fed. How do you take in the technology overlay right now and what it will do to wage growth? Do we grossly worry about wage growth where we should not?
Yeah, I'm not. That's a great point. Wage growth has held up admirably well during the pandemic, and I do expect it to continue to accelerate as the labor market continues to improve, unemployment comes in. But I'm not. I'm not concerned that this is inflationary because productivity growth has also accelerated. Now, part of that is cyclical related to the pandemic, measurement issues, all that kind of stuff. But abstracting from all that, looking through the noise, it feels like productivity growth, underlying productivity growth is accelerating. And there's many reasons for that. One is, I think, technology. There's a lot of technologies out there that's just taking time for businesses to incorporate into their business practices, but I think they are, and I think we are seeing productivity improve. And that, if that is the case, then that's a win-win, right? That's a win for businesses because they can, pay higher wages and still maintain their earnings. Is obviously a win for workers. It's a reason to be more feel more confident about our long-term fiscal situation because it means more tax revenue. There's endless reasons for optimism if in fact productivity growth is accelerated. And hard to know, but it feels like Tom that underlying productivity growth is improving.
Mark, though, on that note, you mentioned that we may not get some of this fiscal stimulus until 2022, 2023. But by then, what is the argument that it's too late? Maybe the economy won't need it.
Well, the support we're talking about now, the fiscal package, the Build Back Better agenda, is not about short-term growth. It's about long-term growth. It's about lifting long-term growth, lifting productivity growth because of better public infrastructure, everything from roads to broadband. It's about lifting labor force participation and labor force growth. That's, if I give low middle income households support for child care and elder care and paid family leave, that's going to make it more likely that they can go to work. Right now, they can't. A lot of low income households, particularly women in low income households, can't go to work because they can't pay for child care. And this is helping free them up so they can go to work. So this is about long-term economic growth, and it's also about making sure that the benefits of the increase in long-term economic growth accrue to lower and middle-income households, the folks that have been left behind in our economy over the past 3-4 decades.
Mark, this has been wonderful. Mark Zandi, thank you so much. Greatly appreciate it with Moody's Analytics there with a decidedly optimistic cast to the market. You wonder, Lisa, if that was almost a precursor to what we're going to hear from Chairman Powell. He's going to, speak of the great traumas that are out there, but he's going to say, look, here's where we are, and we're not back to fully employed.
Funny thing is, he has to sound optimistic in order to support people's confidence, but not too optimistic to make them think that he's going to remove accommodation. And this is always the dance that we hear from Fed officials. They want to sound positive, but too positive is not good. And all of a sudden, good news turns into bad news.
Yeah, but that's true. But on the rate basis, how do we frame a Jackson Hole at a 1.30% 10-year yield? Without our history of 1.12% and frankly lower in crisis, we're at the oddest place on yield.
And how do we frame this out without talking about the negative yields around the world? And I think this goes to the Philip Lane point that we heard from the United Kingdom, this idea that other banks are watching the Fed just as closely, if not more so, and adjusting their policies in accordance. Because honestly, what the Fed does, the Fed sneezes, the rest of the world gets the flu, right? So how much are they going to have to respond should the Fed surprise one way or another?
Lisa, what do we got in the 9?
The 9, we're going to be speaking with Aberdeen Asset Management Investment Director James Athey, driving the conversation forward about how much Jackson Hole matters and perhaps the employment data, but also the read-through to markets. What is the message that yields basically are going to remain here for the foreseeable future at a time of such incredible growth in profits of companies?
We'll continue. We've given up the tape a little bit this morning. We were nicely up, now up just 2 points, 8 points in the Dow, but green on the screen. It'll be interesting to see how it unfolds after durable goods. Bitcoin, 50,000 down to a 48,000 vicinity. Please stay with us on radio and television. This is Bloomberg.
With the first word news, I'm Rich Kigupta. The Biden administration has told refugee aid groups to get ready to help resettle as many as 50,000 Afghans. The refugees are being admitted under a program known as humanitarian parole. The program would target Afghans considered to be at risk under a Taliban-led government. The stage is set for the House to take a final vote on that $550 billion bipartisan infrastructure bill. A White House pressure campaign and assurances from White House Speaker Nancy Pelosi helped unite squabbling Democrats. They adopted President Biden's $3.5 trillion budget resolution, and that cleared the way for the vote on infrastructure at the end of the month. Securities and Exchange Commission Chair Gary Gensler is warning hundreds of Chinese companies listed in the U.S. to submit to more scrutiny or get kicked out. He told Bloomberg, quote, "The clock is ticking." The SEC plans to enforce a 3-year deadline that requires Chinese firms to permit inspections of their financial audits. In Vietnam, Vice President Kamala Harris stepped up her criticism of China. Harris urged countries in Southeast Asia to apply more pressure to Beijing. She also said the U.S. wants to upgrade its relationship with Vietnam to a strategic partnership. The U.S. may give Vietnam another former Coast Guard ship and is donating more coronavirus vaccines. And another Wall Street bank is trying to improve working conditions for its youngest staffers. Citigroup is asking junior bankers in Europe, the Middle East and Africa to take 2 weeks off by the end of September. Citi also has promised to give analysts and researchers in the region one work-free weekend each month. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rich Gupta. This is Bloomberg.
Defense spending historically has been driven by the threat or the perception of threat. And it is not a particularly safe world at the moment. That's number one. Number two, President Biden has been a lifelong supporter of national security. So this budget that he submitted to Capitol Hill was a nominal increase.
She is the chairman and the chief executive officer of the Electric Boat Company of Groton, Connecticut. When you are on the train between Boston and New York, you look across the water at the secrets of the General Dynamics Company. Arguably, Phoebe Novakovic has resurrected General Dynamics into what it used to be and what it is moving forward. This is a really important interview with David Rubenstein, of course, peer-to-peer conversations. David, she just basically basically rescued General Dynamics. There's no beating around the bush. What is the Novakovic method?
Well, she's very tough. She's very smart. She knows the defense industry quite well. She'd worked at the Pentagon for quite some time, and she, at OMB, was overseeing the defense budget for some time. When she took over in 2013, the previous year, General Dynamics had lost about $600 or $700 million.
Yeah.
And so she turned it around, and now the stock is up about 120% since she's been the CEO. So a very good turnaround story.
It's a good turnaround story, but as you well know, at Carlyle, this is so much a contract by contract, boom or bust business as well. Has she McKinsey'd it into a different kind of company, or is it the same defense contractor that you and I used to stare at across the bay in Groton?
Well, it's a little different in that many defense companies today are making a lot of money on IT or electronic related things or things relating to cyber. And that's an important part of what General Dynamics is doing as well. But the bread and butter of General Dynamics has long been tanks and submarines, and they are very, very good at that. They also own Gulfstream, and Gulfstream's been extremely profitable in recent years.
Well, it is. You know, I decided not to go for the Gulfstream 700, David. I just thought it was too extravagant for what we're doing at Surveillance. Francine wanted to go there. Tell us about Gulfstream. Is it a bolt-on business, or is it really part of her vision?
Well, when they bought it from Teddy Forsman many years ago, it was seen as unclear what its mission was, because it really wasn't a defense part of General Dynamics. It's not a defense industry kind of company. But in recent years, General Dynamics has really turned around Gulfstream to the point where it's clearly, in my view, the elite of the business jet business in the United States. And they have done quite well in their G650s, their G700s, and so forth. So it's a very, very profitable business for them now.
Mr. Rubenstein, it's incredible the timing of this interview as well, just given the events in Afghanistan. Any insight that you can glean from that interview just after the Taliban took over Kabul and, well, where we think about the future of defense spending?
Well, there's always a thought in Washington that when presidents of the United States are Democrats and the Congress is Democratic, probably defense spending will go down. But I think the events in Afghanistan will probably make it more likely defense spending will go up more than even President Biden proposed, because it's clear there is still a lot of uncertainty out there in the world. And I think that what happened in Afghanistan, without assessing whether there was fault on somebody's part or not, is clearly going to embolden people to think we need to have a much bigger defense budget, in my view.
David, one final question, if we could, and it folds in from Taylor's good question. In our business and in our government relationship with China, do you look at Afghanistan as being a change agent for how we speak to China?
Well, I think Afghanistan is going to make it more difficult for the United States to persuade some of our allies to follow our lead. And so with respect to China, China is probably going to have a closer relationship with Afghanistan in the future than we are going to have, clearly. And I think as a result, it will change the dynamics somewhat. But our own relationship with China really is not dependent on Afghanistan. And that's a complicated relationship. And I don't think President President Biden and President Xi are likely to meet anytime soon. The sooner they meet, I think it'd be good, but I just don't think it's going to happen anytime soon.
Right. David Rubenstein, thank you so much, and congratulations. A really inspired peer-to-peer conversation. Look for that tonight. Taylor, I look at this, and you and Lisa have been on me all day on this, and this is a cyber meeting in Washington. Yeah. I guess it's a big deal, right?
Well, I mean, you're right. It feels off the mark given everything else that is going on, though I would argue that Dan Ives of Wedbush, of which his note I am stealing, argues that it might not just be the future of physical war, but the new war on terrorism is indeed the cyber threats. You talk to Colonial Pipeline, they would say the same, that is indeed, whether you think about China, whether you think about Russia. And so you could, I guess, argue that you could fold this into the zeitgeist, as you say, Tom, of where we are today with Afghanistan as well.
Well, and also with an investment, and of course the mystery here, folks, forward to Q4 and into 2022. I would say 2 days away from Chairman Powell's speech, widely anticipated, whether you think it's going to be an event or non-event, that the feeling is, Taylor, that he will tilt dovish.
I would argue, we've been remote for 18 months and a lot has happened remote. So maybe be surprised that something might happen. At least be aware, though you argue a lot of complacency in these markets, Tom, whether it's remote or not. A VIX at a 17 handle and bond yields at a 130. I'm not sure what that's telling you about a liftoff anytime soon.
Oh, we'll have to see. Taylor, tell us about the close coming up. I know you don't know the planning of it because you guys don't begin the planning until 1 p.m., but it's a meme kind of day, isn't it?
It is. We don't always do memes. Sometimes we do discount rates and fundamentals and margins and peak growth. If you want to throw out some terms out there, we do push forward to some of the earnings. Salesforce, of course, as we know, and some of the big ones.
We have Salesforce today?
I believe we do. You're going to also have to fact check me on that. Dan Ives as well. Ever bullish, of course, on Salesforce as we push forward the acquisition of Slack. And then, of course, we'll continue to do some economics, some investments, the works.
The usual. Okay. Well, Taylor, thank you for stopping by. It's good to see you once a month or maybe once every 2 months as well.
I'm back Friday.
Oh, really? Friday?
Yeah.
Maybe I'll be here Friday, too. Very good. Taylor Riggs, thank you. Okay, what I'm going to do, folks, is frame up on a Wednesday where we are into this week. We're into the oddities of the summer. We're into the oddities of back to school and such. But what we really have is a crisis in Washington. Anne-Marie Horton and our team down there watching this day unfold, all of us coming off. For those of you just waking up or sliding into this Wednesday, the president's comments yesterday perceived over 6 minutes on Afghanistan with an abrupt ending as being a little bit, not controversial, but a little bit unsettling. We'll see how the White House rallies off that today. And of course, the news from Speaker Pelosi as she advances forward $3.x trillion of support for social programs in America. We do it with futures up 1, Dow futures up 9. I'm going to call it a remarkable stasis after last week. Monday up, Tuesday up. And at least on Wednesday, we catch some kind of bid waiting for further news flow. And again, I mentioned this earlier, as Greg Peters of PGIM said, you know what? We're extending out our time frame. Q3 maybe goes out into the early part of next year. An important, timely interview on Governor Hochul, Governor Pataki, balance of power. This is Bloomberg.